Good day. This is the Elliott Wave weekly update for the NASDAQ 100 being recorded on Saturday, December the 21st, 2024. Let me start by saying that the other video that we are going to post today has been delayed due to a technical difficulty, but we will get it recorded on Monday, the 23rd, and that is on the announcement for YouTube memberships. Okay, I'm going to start here with the NDX. And as I always start on our weekly update, I am going to just review the large picture, where we are, and where I believe we are now going. And so the largest that I can show that I'm counting in progress would be a primary fifth wave. That primary fifth wave started in October of 2022. So within it, there will be 5 waves of intermediate degree, of which we just completed, by my estimation, intermediate wave 3. I've been looking for this intermediate third wave to complete, and there was timing issues of whether it would complete sooner rather than towards the end of the year, or possibly even carry over into 2025. And the preferred count that I'm using does suggest that that third wave is done, and we've already put in the A wave. So the minute A wave as a part of this intermediate wave 4, which will consist of 3 waves of minor degree labeled ABC. So within the minor A wave, we have, in my estimation, likely completed minute wave A. So again, the A wave looks like it's going to, the minor A wave looks like it's possibly going to be an ABC flat, or in that neighborhood, rather than a zigzag, but yet to be determined. Okay, so on that basis, what we have completed within this intermediate third wave would be the minor fifth wave. Well, we can start down at the bottom. The minuet fifth wave, the minute fifth wave, the minor fifth wave, and then the intermediate third wave. So that rally point that we had, which took us up to the high on the 16th of December at 22,133, again, this is basis the cash, did complete. And then we, of course, tumbled right out of that. And they're pinning on it that it actually was because of the forward guidance given by Fed Chair Jerome Powell. And yes, that may have had something to do with it, but I think more important is to really include within this discussion that I had been discussing in the daily updates the very large, massive call leaning or long call positions that were going to and were due to expire yesterday on December the 20th. It was the very largest expiration on the call side that I've ever seen, and therefore also by other measures that I use to determine these things, and that being spot gamma. So at one point, it was just in the SPX alone, SPX options, it was $1.25 trillion. That's what was due to expire. That was the nominal value of what was due to expire. So I think also after the interest rate, the market received what it was looking for, which was a 25 basis point cut in the rate. But then that forward guidance stated that, well, we shouldn't be looking for as many rate cuts in 2025 as possibly thought of. So that then started the tumbling. But in essence, we already had numbers or levels in place that would signify a flip. So in other words, a flip from risk on trading to risk off. And that level was in the SPX. And I know, so I'm talking about the NDX, but it was really in the SPX was 6,000. Once 6,000 broke, the NDX, the NQ, everything went with it. And we saw a massive, massive, broad-based sell-off. And so in all asset classes, I should say. It came in the precious metals. It came in all of the equity markets, the ETFs, the bond market, the dollar. Everything just reacted to what was happening. And it was a severe, strong down day. That was on Wednesday. Then we saw the recovery begin, but actually by Friday, we started lower, but then the market flipped and we managed to close significantly higher. Again, I believe that was more associated with the expiration that was also happening on Friday. We saw many times where the markets traded down to levels and really within the component stocks, let's say. And what was happening was that they were monetizing positions in advance of the expiration. And then what we saw on yesterday, for a greater part of the day, we started at the low and then just started to rally and rally with some pretty strong strength, because what we saw was, again, the market bringing the market back up to monetize additional positions. Now, what's going to be the result of all that? Yet to really be seen. I think we can really take a look at some of the reports that came out on Friday, which were from Spot Gamma, to show how much of the gamma really got rolled out to next week or the end of the year. Again, when we're dealing with the gamma and within the SPX, because that's the big daddy of the indexes, that holds the greatest amount of nominal value. And so, again, it's yet to be determined. So we're going to wait and see what happens, because if a lot of this expiration produced the delivery of a lot of stock to the holders of the calls, then we may see the market slip again come Monday and into next week. And it's going to get interesting from here. So let me just say that when I'm looking at this particular count, I also will include now what my alternate would be, and that would be on the weekly, but I can bring it down to just, well, actually I can't. I'm going to have to leave it here, because what I want to show you is that there's that possibility that within this very long-term count, we can have to do a revision of what this actually was. So within minor wave 5, there's a slight possibility that the minute third wave is what actually completed on the 16th. And that what we're doing now is a minute wave 4. Now, the fact that we came very deep, so if I have to bring this down and we bring it all the way down, let's take a look at the 4-hour chart. It's like having to move this 3 up to here, because this definitely was 5 waves up. And the only way I can do it is to put the third wave up to here. And then this would be wave A of minute wave 4. And so, and the difference is, again, and I will be updating also the SPX, but just with the difficulty that we're having is here on the NDX, it's pretty clear that it was 5 waves down, suggesting that the overall pattern for minor wave A will be zigzag. Or I may even have to put this up to a minor degree and count these as minute 5 waves down. So there's some changes that still can happen, but the important thing to look at is the fact that in the NASDAQ, it did 5 waves down, which one, to me, gives us confirmation of this completing a larger rally. Gives me also some confirmation that if this count is correct, then yes, it definitely was intermediate wave 3. If I'm going to stick with the alternate, which we're just leaving out there, I'm not using it, I'm just stating it, would mean that this third wave gets moved up to here. and that this would be a fourth wave still in progress. Now, again, saying that, if this is 5 waves down and this is going to be a 3 ABC, then we're looking for another serious 5 waves down. And trust me, that would then likely break below 19,919 or 19,911, which, excuse me, that's not right, 19,938.39, which is the high back on August the 22nd, which we concluded that was the end of that minute wave 1 of the minor wave 5. So if this 3 gets pushed up to here, the 4 cannot break below that level. So part of why I'm leaving it as that third and just including these as possibilities of what may be in progress here is that just what degree would this fourth wave be? Either it's going to be a minute, it cannot be a minor, because that would mean I'd have to move this minor third all the way up to here, and that just doesn't fit for me. But within the minor 5, there is the possibility that the minor or the minute wave 3 of minor 5 would move up, and this would make minute wave 4, and therefore cannot overlap. But the strength of that drop, and if it's 5 waves down and I'm still looking for an additional 5 in a C wave, I would think we're definitely going to start to come down, because it'll be of equal size, mind you, now, right? So that would suggest we're going to come down and at least break that and get down into here. Now, as well, we can take a look at how did this minor wave 4 unfold. We came down in 5. Here, we came down in 5. Let me just try to open this up a little bit. We came down in 5, right? And from here, 1, 2, 3, 4, 5. Although I put the A there, and we did it in a regular B wave. And so we still might be doing that, to tell you the truth. We still might come down and then go back up in this type of a B wave, but not necessary. So we have down, and then we had a B wave up, and this could still be a B, and we get a C wave, and we get a B wave coming back up. And then this is the important thing. That C wave took 4 days. 1, 2, 3, 4 days. Excuse me, it's a 4-hour chart. 3 days to unfold. 3 days to unfold. And here in the cash market, it slipped from 19,538, 539 down to, right there, 17,435. 2,000 points in 3 days. Now, let's go back and discuss what has just taken place. If truly the amount that was going to settle, the amount of gamma and positions on the call side that was going to settle, leaves a lot of traders, institutions, or whoever long the underlying, long Apple, Amazon, everything under the sun that's a component. They're long. So what can happen when all of this gamma gets released, so it's been bound up and it holds onto volatility, which we saw get sold on Friday, which tends to lead me to that they rolled these positions out, right? So a lot of these positions, they were closed on Friday, but they rolled that gamma out to the 27th, to the 31st, possibly. I don't, again, I don't have those defined numbers yet, but there is that possibility. If not, then we have to consider that what comes from what usually is a result of something expiring. It releases the gamma. So what happens to volatility? It pops. It's no longer being suppressed by the index. It'll be popped. It will get a volatility pop. So volatility come back. Well, then what happens as a result of that gamma being released, the market sells. It's not the easiest concept to understand, but if you just go through the actions, you get all these people are long, which is going to leave possibly some others short. So it, it could just start the second avalanche is what my thoughts are. So this large next leg down, which again would throw the market into a risk off position. Now, under the same calculation, what the level I'd be looking for in the SPX, not the ES, the SPX, the cash market in the S&P, is again that 6,000 level. If the market can get back above that, they're back into their comfort zone. They're back into that risk on trade. And that would then just build, and we'd see the market begin to rally strongly. Now, that's the situation we are now going into Monday. Now we're going to really move into year-end trading. What do firms want to take forward? What do firms want to get ready for? Right? So again, the threat before, if the market could hold above 6,100 and basically hold above 6,000, it left that pinning of December the 31st at 6,055, 6,055 SPX, which is where the JP Morgan collar is sitting. So the thought was, it's like, if we can hold it above 6,000 now, and that remains in place, if the market can get itself back above 6,000, then likely it's going to get pinned at 60.55 come December the 31st. So what's that do? It really pushes us out another week and a half before the next ball drops, let's say. And so what we really need to deal with is just next week. But in terms of this large account, I'm throwing out the possibility of what the alternate would suggest. And if the alternate is suggesting 3 and then we come down in a 4 and we rise back up, it puts it in perspective that the SPX is going to get above 6,000. And now we've got that risk on, and that goes into year end. And again, the other side of this coin is we finish this corrective process, whether it's an intermediate 4 or a minor third, a minute fourth, very quickly, and then rally into the end of the year. Again, I'm going on the basis that this took 3 days to bring itself down, 3 days. And if we're going to start on Monday, Tuesday, Wednesday, it'll be Monday, Tuesday, actually, and then Thursday. So what we're really also dealing with is like we're right in the middle of the holidays. Half a day on the 24th, 25th we're closed. We're open on the 26th and the 27th. Then we're into next week, which we do get a full day on the 31st. That's just the way it is because it's the last day of the year. Is that when they want to do this? I don't know. Again, these are just up in the air. But better that we're prepared. And so, because the volatility, the not necessarily as measured by the VIX, the volatility in these underlying stocks, in these indexes, I believe will remain high. Now, again, because of everything expiring, we're going to get a pop, I believe. So if that still is in existence, then we're going to get those larger price swings intraday as this all works itself out. So how do we all want to trade that? Well, I think it really starts to break down as you take it day by day. And we all, I think as traders, if you're a position trader, you really need to start to think about what you want to do and what you're keeping. And you need to maybe just protect things if you're looking to carry them into next year. If your outlook into next year fits that you need to be long, then you might want to protect that against this movement that may be coming. Now, let's talk Elliott. If I'm sticking with my preferred, which I am right now, that we finished intermediate wave 3, then I'm looking for an intermediate 4th wave down. Here are our markers. This is on the cash market. The first one is 0.236. That's 19,428. Now, as I have said many times, Elliot has told us that the fourth wave in motion will find its terminus within the price territory of the fourth wave of one lesser degree, most often its terminus, its endpoint. Well, if that's the case, we're not quite dropping into it yet, but we can see where that level is, 20,665. We got close with that low being 20,939, so we were within 300 points. Trust me, on that whole big decline, that was an 800-point decline on last Wednesday. Add to it, we put on some additional. We're not that far from that level, and that drops us into the box, into this support area. Now, we're definitely looking for it to come down closer to the terminus, which is 17,445, I believe it is. Now, we got the 382 at 17,754. That's perfect. I'm looking at this fourth wave likely to come down in between these 2 points. Now, a serious blow to the market would I think it should hold. I mean, we're closed at 21,289. 17,435 or whatever that level is down there. And if they do it quickly, I'm assuming, and I know I don't like to use that word either, that the market would find its bottom down in this area. So we have the 382 at 17,755, 54, and then we have the 50% marker at 16,402, and that would be in a shove. That would be, it's bailing out on everything, and that may yet to come. I don't think if the alternate is in force, a minute fourth wave, I don't think it comes much further than here. Then we rally again to finish it in an intermediate fourth wave. I definitely would be looking for it to come into the box deeper and towards the lower end of it. And if I'm following the pattern, what we've already seen, dangerous. It could come very, very quickly, and it would be a product of gamma, a product of volatility triggers, put walls, etc. That creates a situation when those get broken and penetrated and then broken and left in the dust, it forces adjusting. Now consider what needs to be adjusted when we're looking at still coming out of a situation where there was massive calls. That now, for the better part, December 20th, done, expired. So now we're into what comes out of that. What are the numbers going to show? And I just want to also put in that once the memberships start, what I would want to be adding to the daily updates, and of course then the weekly updates, are those levels. They're extremely important. I'm already telling you 6,000 in the SPX for the upside. That calms it all down. I need to put that out there. But there are additional levels, of course, that change every day because of the trading. So again, I'm looking to see what it looks like on Monday morning when I get these new numbers. And those levels will be included in a daily update and then also the weekly update. So that'll be under the memberships. All right, so now coming back to this, let's bring it down to the hourly so that we can take a look inside. You can see here, 1, 2, 3, 4, 5. It's a pretty clean 5 to me. So I'm labeling it minute wave A. It could be up 1 degree, but I always start in the minuet because that's how I finished. So this minuet 1, 2, 3, 4, 5, minute wave A. This basically, when I break it down to a 15-minute, you can see it basically does resemble a 5, not a 3, a 5. and this is a 3. So it either is going to flip and go up to finish this wave, or it's going to continue to go down. Now, this is the cash, so we won't know until Monday morning on the opening what is going to be happening. But now, so I'm going to leave this as is. This is open. And what we can put in is, if we're looking for our levels on the way up, we will reach the 50%. So what would be up next? That we come down here and we go up there. Now I could put one more in. So that's just B wave. Rally back, B wave. And so we have 618. We have the 15-minute 200 at 21,605. Let me take it back out to the hourly so we can take a cleaner look. We have the hourly 50 at 21,526.27. We have the 50% marker still there, so it would still probably provide some resistance at 21,523. So you can say 23 to 27 is a resistance, small little resistance area. A clean break takes us up to the next resistance at 21,667. Now, let's take those off so we're not going to get confused. And now let's just measure out this. Well, we're saying that A, B, and the internal B wave is done. We're going to come up in a C wave. How high can it get? 618, 21,641. But it has to come up in 5. But what's the most common? C equals A. 100%, 21,880. Now, if we manage to do that, consider that what's going to be underlying. If it ends up being just 3 up and we stick a B on it, what comes next? A devastating C wave coming back down. That would be my take. I would have a really hard time counting this as 3. Now, S&P, a little bit different story, but here, again, I'm only talking about the NASDAQ right now. I would find it pretty difficult to declare this to be 3 waves and not 5. All right, so let's take a look one last. Within our cash market, we want to take a look at the moving averages, and we can see that the 50 held, so it didn't, it kind of, maybe you can consider that it got a threat, but the 50, the daily 50 sits at 20,818. Now, so what happened? Well, on the way down, it broke the 8, it broke the 20. We got a lot of follow through when it continued to waffle around the 20, but then when it broke it again on Friday, it sank to the low. Then what did the market end up doing? Getting itself back above the 20, providing additional boost, getting above the 8, which provided the final boost. Those are the daily. So, but here we are. Where did we close? Back below both. So that kind of starts to give me a little bit of an insight that, well, on a moving average basis, I'm looking for it to drop and at least go test this. Possibly. Then we've got a little bit of picture. So the moving averages, yep, they coincided with the moves that actually happened, but that close is just below the 20, the daily 20. All right, let's go over and take a look at the NASDAQ futures market. Everything else stays in place as described. But here again, this is the daily, and I'll come back to it because I want to go down to the 4-hour chart and open it up, and I want to take a look inside. Clean by clean. 1, 2, 3, 4, 5. And this actually ended up being the diagonal that I was talking about last Thursday coming into Friday. I said, well, it's pretty steep and looking very diagonal-like, and sure enough, that's exactly what happened. And then, bam, right out of it. Because remember, diagonal, triangle. So what's the result of a triangle pattern? Either up or down. This case, the triangle was, the diagonal was down, and it was a fifth wave. It gets to that low and it springboards up and out of it. And that's exactly what happened. Now, the converse would be is like if it diagonals up, then it springboards down. So it's like taking a dive off that high dive and you just, whoa, you get right down there. So, but we had the opposite, and we got the exact result that we should, announcing that that was a low, and then just the resulting move. Now, here again, I pretty much am getting 5, so I'm only looking for B wave. Here's our first marker, 21,862. And the second marker is 22,093. That's the one that likely coincides with those higher levels in the cash. So remember, right now we're still close to $300. I think it's $283 premium in this March future over the cash. That's why you get these big differences. So, and then I would not expect this to break above where that third, actually I can put it a little bit. Let me change this and put this actually up here. Because it's now we're doing for the B wave. So, and I apologize. So just making that little correction, you can see we have 21,900, so a little bit higher, and 22,142. Now, one last thing that I can add, because a B wave certainly has the capacity to do it, again, under 5 waves down, it makes it a little bit more difficult, but I cannot get rid of this one, 0.882. And that's at 22,280. This fib level, and it is a fib level, is widely used by a lot of algorithms. It gets programmed in. Don't know why they choose 882, but it just is one that they use. So we're going to keep it out there in case we get there, because we'd be threatening that high. And if it does, then I will have no choice but to say A, B, 1, 2, 3, 4, 5, C. Right? So there is the possibility, and you can see it on the interior of that 4-hour. A, B, 1, 2, 3, 4, 5. That C wave is gigantic against the A wave, but, you know, stranger things. So if I had to move that 3 up, this could be the 4, and I would put it right there. Then we'd be looking for this just to go up and clear all of this and just go up and make another new high at wave 5. And in that case, 1, 2, 3, 4, 5. And can we do that by the end of next week or year end? We can. So remember, talk about those two situations where are we done with intermediate wave 3, or do they have one last plug left to fill? And that could be rallying back up to finish the year at the high. Now, the 27th is next Friday. We may just do it then. Holiday shortened, but to me, I'm like, boy, you're going to let this go during the holidays? And that's part of the problem. You know, when you got something big that's going to happen and something throws everything into progress, a lot of people are not available. They're on holiday. They're away. They're on the ski slopes. They're at the beach, or whatever the situation is, wherever people do Christmas holidays. And so they could be gone from, let's say, Wednesday, Thursday, Monday or Tuesday. So they could be gone all next week and the following, because it's Christmas, New Year's, and it just this year happens to come in on Wednesday. So that also does have a voice on what could possibly happen or how fast it could happen. All right, but right now, I'm leaving the possibility that this was within here, even the third, or the minute 3. So, because inside this wave, no. See how deep we got? We broke everything. So this really tells me that if anything, it's a minute fourth wave as an alternate. And in fact, I'm sticking to this and think that we likely aren't going to break that. We possibly will come up and give this a touch, or we already did ABC. And now we just dropped from here. So that's kind of my thoughts. Coming down to the hourly chart, you can see it a little bit more. Where it does, I could do an A, I could do a B, although this is pretty weird. Or it could be A, B, C, B, 1, 2, 3, 4, 5, diagonal. Beautiful diagonal, by the way. And then I would put the 4, minute. 1, 2, 3, 4, 5. And I would imagine it's going to go as quickly as it began. So again, using that same pattern, but we reverse it. And maybe it would take 3 days to get up to the highs. Now, I won't include it right now because I'd have to go back out and really put a 4 there and run this over to it. Right? If we get the signal, then what you're going to do is you're going to run extensions. There's wave 1. You run it over here. That would be wave 4 under the alternate. And we zip. And that's how you will get your levels going up. I am not going to do it right now because I don't want to start any confusion or anything wrong, because that's not the direction that I'm headed just yet. All right. So next week, I actually will be traveling starting on Christmas Day. And I will produce updates, but I will be in the state of Maine, and but I will do the dailies. Christmas Eve is half a day. We're closed on course on Christmas, then we're open the 26th and 27th, and then the following week we have Monday and Tuesday. Full day on Tuesday, as far as I know. And then Wednesday, we're closed for New Year's, and then the 2nd and the 3rd. I will do updates and attempt to also put up my weeklies accordingly. I want to also, again, say thank you to everybody who has followed my work in 2024. I really wish everyone a very, very, very Merry Christmas, a happy holiday, and hope that we're all joining family or friends, and we can just step outside of everything that's happening and just enjoy the moment. And the next daily update will be on Monday, December the 23rd.